around. So you can't talk about universal health coverage without looking at this cube. So this cube is what is called the UHC cube. And really what it says is that when you're doing universal health coverage, you're trying to cover as many people as possible with the most essential services at the most affordable cost as possible, right? So for any social health insurance fund, this is the objective you're trying to do. You're trying to say, how can we get as many people to have access to the most essential services that they need without having financial hardship for themselves, but also in a way that is sustainable for a fund, right? So this is a mandate that was set by the World Health Organization in defining what UHC is. And really it seeks to achieve equity, efficiency, and high up there is quality of care. So going into history, I'm a bit of a history buff, so I think historical context is usually key when we're discussing this to help us understand things from a more macro perspective. So the origins of social insurance started in 1883 in Germany in the Industrial Revolution. So workers were facing injuries, and it was decided by the government that employers need to be able to pay for some insurance for their workers so that when they face injuries, they're taken care of. They served as a catalyst for the establishment of a lot of social health insurance funds thereafter. Then during World War II, what happened was a lot of these health systems collapsed completely. With the exception of a small island called Costa Rica, which in 1942 then became the first country to have universal health coverage, while others were dealing with the destruction of their health systems. But post-World War II, you see the emergence of and the establishment of a range of social health insurance schemes, including the likes of the NHS, which came out of need. There was a lot of collateral damage that happened, and so there was a need to be able to establish strong health systems. So you can imagine after a war, people don't have money, they don't have the technology that we have in modern day to be able to establish, data systems and things. So that was the foundation for a lot of the more developed social health insurance schemes that we see across the world and the more developed public health management countries. Then in Kenya, in the 1960s, there's a guy called Dr. Charles Njonjo. In 1963, he said, the locals need access to healthcare. So just to give you some context in the country, so Nairobi Hospital was an extension of Kenyatta National Hospital, and it was for the Europeans, right? And at that time, the Europeans and the Asians had individual social health funds. And so Charles Njonjo said, we need to create a fund for the Kenyans so that they can have access to healthcare. So in 1966, the NHIF is formed, and it started really effectively as a civil servant scheme. There'd been a lot of individuals who had gone for education overseas, who had come back in as civil servants. And so in 1966, it was established really to take care of those individuals. In 1972, the informal sector was brought in. But something to note is that the benefits in those periods, up until 2015, only covered inpatient. So all that was covered was you go to hospital, when you're admitted, the NHIF used to pay for your bed charges. In 2015, that's the first time you see the outpatient care coming in. So for those who might not know, so your outpatient is when you walk into hospital, seek the care that you need, and walk out, in the same day. Inpatient is where when you're admitted, right? And then that happened in 2015. But super cover proved to be have its fair share of challenges. It was not sustainable because what was happening is the informal sector, people would pay for when they needed care. So what would happen is you're told your cover is $500 per month. You have a waiting period of 3 months, which means you need to have paid $500 for 3 months in a row to get access. So what would happen is people would say, oh, I need to go to the hospital. Let me just pay $1,500 so that I can access my NHIF and go to the hospital, which wasn't sustainable for the fund. So you'd find, for all the money that they were collecting, NHIF was not able to collect enough to pay for the benefits for the informal sector, because the people in the informal sector who were using the benefits were only the people who are sick, really broadly, on the grander scheme. And insurance doesn't work like that. For insurance to work, you need a mix of good and bad risks so that it's more effective and more sustainable. So in 2018, recognizing the sustainability issues and knowing that we needed to move towards universal health coverage, there was a health experts reforms panel that was put together by the president. And what happened with this panel was to see, okay, what needs to change under NHIF to be able to achieve UHC and to be able to do it in a way that is sustainable. And now we're sitting here in 2024, and the conversation of SHIF has come up. It's a fund that is coming to replace what was NHIF, and the same mandate remains. On a global scale, UHC by 2030 is what people are working towards, and so SHIF is meant to be the main driver towards achieving that. So just to give some context about how social health insurance generally works. So there's some studies that were done about who has achieved the best level of universal health coverage, right? Or like which countries have achieved effective coverage. And it was found that best in class is Japan. Now, Japan have a social health insurance model, which is similar to what we're establishing, where you mostly collect from the formal sector in terms of most of your funding, and then your informal sector do more, fixed contributions, and then you have other supplementary collections through, government budget, other tax avenues that come through. Yeah. But, you might know of the system that is in the UK, which is the NHS, where they just take a percentage of VAT and they put that into the health system. Now, that system of using a tax-based system is called a national health service, or the beverage model, right? And you see what happens is it's mostly, government collect funds in the form of taxes, and then they pay mostly public providers to provide care to the population. What we're seeing happening in our country is more the social health insurance model, where it's mostly funded by employers and employees through a contributory scheme. And then, the providers are a mix of private and public in terms of the delivery of care. Now, the pros and cons of these range. There's debates about which is the more effective way. The benefit of something like National Health Service, where you're using a tax-based approach, is that it's administratively more easy. Just taking a percentage of VAT, you don't have to deal with, any pushback. It's just easy to do, from a collections point of view. You don't have to deal with the informal sector where it's harder to collect from there. But then there's some inefficiencies that arise from a purchasing point of view, because there's no incentive as the government to purchase more effectively, which is why the social health insurance model has been said to be better at delivering more value for money cost of care, because there's just more incentives in the framework for making sure that, one, you're collecting more money because it has a bigger revenue base as a model, as a financing model, but two, the purchasing tends to be more strategic in terms of how you have things like accreditation of providers and the process of assessing for quality of care. So there is a move towards, most systems going towards this kind of national health insurance model, where you have one person who pays providers, right? So that you do have those efficiencies of purchasing, but you have a mix of where the sources of money are coming from. And the challenge we face in Africa is that we have high levels of out-of-pocket expenditure, which includes Kenya. If you go to the graph on your left, you'll see that here, Kenya has a UHC effective index of just over 50, so which is at about 53. And they're saying a good system needs to be at about 65. Looking at your health outcomes, are people getting healthier? because your social health insurance fund should be able to allow people to get healthier, so you have more productivity in the economy and more economic growth. And lastly, just looking at the main challenges. So we'll look at the challenges more on a wider base for developing countries, and then more specifically to Kenya, what we've seen as historical challenges. So, the study that looked at UHC said it was done by Lancet, it was partnership with World Bank and WHO. So we've not done personal data validation, but, they said basically to have a decent level of efficiency, you should be spending around $1,400 per capita on healthcare. Now, just to give you context, as African nations, we spend about $8 to $129 per capita, what works for us is that we have very young populations. On the continent, our average age is 20 years old. So the health risks we face are fairly low. The other challenge we face is we have a relatively small tax base. Because we have a big informal sector, the formalization of that space to collect taxes is, has been slow. And so it's difficult to just say, let's take a percentage of VAT, although Ghana has done that. Out of pocket expenditure, which we've said is quite high. In Kenya, it's close to like about 30%. So it's about 25% of total money that is spent towards healthcare comes out of people's pockets. So not out of any insurance, not out of any funding or out of any government. Then health infrastructure, in terms of how many doctors we have for the population. Even though we say in Kenya we have unemployed doctors, we've had that challenge. There is a challenge of resourcing of the number of doctors that are available. And only like 4 African countries have the recommended 1 to 1,000 doctor to population ratio. Again, these things are not as much of a challenge now because we're young, but with aging population, it becomes more of a challenge. Another challenge we face is high medical inflation because we import most of our medical technology and medication. We're subject to a lot of foreign exchange risk. So the cost of care goes up higher, right? We don't do a lot of local manufacturing of things. Big informal sector, which we've mentioned, then the rise of what we call non-communicable diseases, otherwise known as lifestyle illnesses. So those are heart conditions, your diabetes and things like that. So unlike developed nations who were building their systems in the 1940s, where lifestyle diseases weren't as many in terms of the cancers, they're dealing with a lot of communicable illnesses. As we build our systems, we have to account for both in some ways, Even though non-communicable diseases affect a smaller percentage of our population, they're more prevalent than, they were back in the 40s. Or maybe it's just an issue of people knowing. But from a lifestyle point of view, we're taking more sugar, we're eating less natural foods. And so that is a challenge. We don't have enough health data to be able to do things more effectively in terms of pricing and being able to understand what are actual things that are driving our health expenditure. And then there's minimum population sensitization on preventative care and financial literacy, right? So when it comes to insurance, then you have to explain to someone, you've contributed all this every month, why don't you get some money back, right? It's not your money, it's you taking care of your brother or your sister, right? You're being your brother or your sister's keeper in insurance. That's the effective value of insurance, is that you pay knowing that you might not use that money, but your neighbor might need to use it at some point, right? So educating people on that principle tends to be difficult, and that's everywhere around the world, right? Insurance is just a push product, not a pull product. It's not a product that people opt in to buy. And then preventative care, we're sitting a lot, we're not as active as we used to be, and that's driving lifestyle illnesses. You'll find in a country like Rwanda, they've done a really good job of improving their preventative, having high levels of preventative care. There's a very active population. So naturally, you don't even have as many people going to hospital to seek their care. Okay. So now even more specifically to Kenya, some things that need to be considered as we transfer towards SHIFT Is how are benefits designed so that, you know, as many people have access to essential benefits, and, you know, your out-of-pocket expenditure is low, but all the things that people are paying out of pocket, you're trying to figure out how to make sure that those things are being covered more, so that you don't have duplication with the private insurance market. So right now we have duplication in the way that things are framed. So you pay for both NHIF and private insurance if you have private insurance, maybe as an employee of a company. And what happens is that effectively you've paid for two products that could give you the same service. Yeah, it might not be the same quality of service, but you could go to the hospital and just use your NHIF card or your other insurance card. Yeah. So we're trying to we need to be able to move away from duplication, because there's a lot of inefficiencies that happen, towards more complementary or supplementary. So what the public pays for is not also covered by the private sector. So the private sector only covers what is not provided under the public sector. You know, there needs to be sustainability, considering the budgetary constraints, and then, you know, what is the provider capacity as we're designing benefits. From a funding point of view, we've talked about the challenges with the informal sector, so that needs to be dealt with, because that's historically what has led to sustainability issues. But also in the long term, you don't want to be subject to donor funding. There are things like TB and HIV are fully donor funded. And what happens where there's fragmentation? So where there's this maternity program that pays for all maternity illnesses, and this HIV is separate from all these things, you have more fragmentation, which reduces how efficiently you're purchasing services as a health system. Enhanced benefits is a big challenge. So historically, NHF offered enhanced benefit schemes, which were mostly towards civil servants. So you'll find the county government schemes, and for different, like, civil servants, there were different schemes where they paid a certain premium to the fund. But, you know, whether, you know, now that those schemes will need to be contributing to shift for much lower benefits, there's likely to be pressure to expand benefits, right? But expanding benefits then leads to historical challenges where you're offering too much that you can't afford for what you're collecting. Quality of care, we have limited number of beds and hospital personnel, and we need to be able to think of quality of care as a big component of UHC. It's not just about how many people are covered. A big part of it is, what are the health outcomes? When people go to hospital, do they come out better? And then improving your standards of care and making sure treatment protocols. So there's a problem of over-testing and over-medicating in a lot of health systems. You go to hospital, you're told you need these 5 tests, 6 tests, when you actually needed 1, or you're told you need all these medications when you only needed 1 or 2. And that's really just a lot of challenges around being able to implement good treatment protocols. And then fraud is a big challenge in terms of claims. So from both internal, in terms of the internal social health insurance fund, from insured members, and from providers, right? So you want to be able to leverage technology to improve transparency through data, through reporting, and then also making sure you have good governance. And then health seeking habits, there's a need to provide incentives. So right now we have a challenge where, as an individual, if I have a homa, I go to Nairobi Hospital, I go to Aga Khan, and, you know, it costs a lot of money. It also costs a lot of doctors' time. Yeah. So doctors are treating people who are not really sick, because you don't need to go to the hospital when you have a homa. You know, all you need is to drink some dawas, to rest, have some water. But so there's, you know, use of resources that's inefficient in that process, right? So there's an importance to incentivize insured members to seek primary care. That's what we call primary care. It's essential care at primary care facilities. Yeah. So that's where you'll hear about the primary health PHC fund, the SHIFT fund, and the emergency fund, right? So the PHC fund says we pay for care in levels 1, 2, and 3, which are your health centers, your dispensaries, where you should go for care first. Yeah. And then you're referred to a hospital, which is not what we're used to doing in terms of as insured members, right? So there needs to be incentives, but also there needs to be strengthening of provider capacity, so health centers can deliver that primary care, because otherwise it becomes unsustainable for people to go to higher level facilities where it costs more to take care of primary care needs, both from a resource point of view in terms of your hospital personnel are treating people who are not really sick. An interesting statistic is like in the private health insurance market, you find 30% of expenditure goes towards treating respiratory illnesses, which is mostly like tonsillitis and coughs and colds, right? So during COVID, they made a lot of money. They made profits for the first time in a long time because people were not going to hospital for those things. You know, kids were not bringing coughs and colds to the masses in the offices and things like that, and people were washing their hands, right? So there are a lot of things that were easily preventable that were causing a lot of losses in the private insurance market. But even still, that are being treated at higher level hospitals when they should be treated at lower levels of care. And then the cost of care we've talked about, and public perception is a big challenge, right? So now we're moving, people don't understand the transition, which is some of the questions we want to address, and being able to communicate the value of the fund. So some key takeaways just before we go into the panel discussion with the experts who have joined us is from a contribution point, the regulations say both formal and informal sector will contribute 2.75% of their income with a minimum of 300 Kenya shillings. For informal sector, it said that it will be determined through a means testing approach, and that's what will be done. There's no cap that has been defined at the moment, but just for context, if you look at this table on the bottom right, you'll see that historically those paying 100,000, those who earn 100,000 and above from a gross salary benefit had a flat fee, they paid the same amount, right? So in pursuit of equity is why the contributions are trying to see what is a pursuit of equity, but there's an argument that there should be a cap, right? There should be a cap to the level to which this goes for the contribution level. So that's one of the main hot contested issues that we'll have the ministry also be able to give us feedback on. And then to ensure compliance with the deductions. So if you want to seek any government services, you'll be required to have a social health insurance number. So that's in terms of getting whether it's a death certificate, a business license or anything. All individuals will be subject to the same benefits package, unlike what has historically been there. There will be 3 funds. So everyone will pay money towards the social health insurance fund. Then in terms of seeking benefits, first you go to the primary healthcare level, then you're referred upwards to secondary facilities. And then lastly, which we also know a lot of our clients want to know, is the impact on private insurance. So there is opportunity for growth if say all those who are in enhanced benefit schemes are able to pay for both. So coming out of their salary contributions to SHIF and looking for private solutions to get enhanced benefits, there's some opportunity for growth. But there's also a risk of shrinking because disposable income will become leaner. Yeah, so people find insurance is one of the luxury items that's the first to usually fall off, right? So that's it in terms of the introduction. And so now we're going to spend the next 40 minutes engaging some experts who have joined us. So we have with us 3 people who have worked tirelessly in these sectors in the health insurance market. So first of all, we have Stephen. Stephen Kabora has worked in the ministry for over 14 years. He's a health economist. He's been a big part of the conversations in terms of levels of contributions and health financing for the Social Health Insurance Fund. So he's seen the evolution of reforms from NHIF and now moving into SHIF, and has been a part of those various programs that have tried to restructure health financing in the country. We have Dr. Avit Daka, who wears very many hats. He was a founder of Avenue Healthcare, the chain of providers, but has also been a great advisor to government in many ways, and is also working with government to see how to make sure that from a resources point of view, in terms of personnel, there's some synergy around how they're regulated, and is making sure that we're achieving better quality over time. And last but not least is William Kiama, who is the manager at the Association of Kenyan Insurers for general business. So he's the go-to central person when it comes to all medical insurers in the market. So I'll ask them to join. We'll just stop sharing our screen so that you can see us all. So thank you to the panelists for joining us. So let's just make sure that everyone can be heard. Dr. Thacker, you good on your sound?
Can hear you.
Yes. Okay.
Yeah,
thank
clear.
you.
Well done.
Okay, Stephen, are you good on your sound?
Yes, I'm here, but having challenges with my video, but I can hear clearly.
Okay, great, thank you. And William, can we hear you?
Yes, I can get you clearly. Thank you.
Okay, all right. Thank you for joining us this morning. You're the brave ones. I think people have been, some people may have run away from this topic because it's been hotly contested, and we've seen that it's been trending, whether it's on social media, and there's a need for people to get access to information. So thank you for taking your time this morning to come and share your expertise with the audience members. Just to let you know, we are at 780 attendees. Thank you all to the audience for joining, for coming to get yourselves educated, and for bringing the questions to the plate. So I'll ask with Stephen. Stephen represents the ministry here. Dr. Wangia, who you may have seen on the poster, was unable to make it. She's the Director of Health Financing and is part of the committee for transitioning from NHIF to SHIF. But she sent in Stephen to come and represent, and he has had a wealth of experience and has been the key driver around contributions and means testing and the technical approach for that. So Stephen, I'll ask you to start in terms of the first question. What is the value of the change from NHIF to SHIF? And as you're answering that, what are the anticipated risks and challenges that people should be aware of or that have been considered in the process? So why the change? Why not just use NHIF on all the reforms that were set before? Why make the transition, and what are the risks that are associated with that?
Thank you very much. I think the change was really necessitated by the major challenges which we experienced with NHIF. Number one, structurally, the way NHIF was set up, as you showed in your presentation, it was mostly to cater for the formally employed individuals. That was the structure according to the law. So we tried to amend that and to have the major part of the population, which is informally employed, included in the NHIF, but structurally it was having issues. Number two, we also wanted to remove the legacy issue. NHIF has been having the legacy of mainly being a hospital fund. It's not a health insurance fund, it's more of a hospital fund, funding more of inpatients. So we needed to shift that to have an insurance system which considered primary healthcare as the basic or the most important part of the healthcare system before we get to curative. And lastly, we noted that also the way the benefits were crafted at the NHIF were not very comprehensive, specifically for the people who are not in the enhanced scheme. So there was a need to change, and it was agreed that the best way to move would be to have a new policy in place. So we had the health financing policy in place. And to follow that up, we needed to have a new law guiding health insurance, the public or the social health insurance, looking at health insurance holistically from primary health through curative all the way to chronic care. So with that brief, the most things that we are really looking out for in terms of challenges will be One, we're trying to ensure that the package that is promised to the people is what can be funded and is funded comfortably. It has to be comprehensive. So in case we make a mistake in terms of the package that is offered to the people, that will present a very big challenge to the new body, starting on the wrong footing. And the second challenge, which we foresee specifically in the initial period of establishing the social health insurance, is the issue of adverse selection. So we might find people who have preconditions, because the current benefit package doesn't have limitations. So we might find those people with preconditions loading into the new organization more than those who are supposed to cross-subsidize them. So that might present a challenge, but we are trying to ensure that we have provided for that, so that once the new body comes in, it is healthy, it is able to offer what it promises. And thank you, Mbak.
Thank you, Stephen. I'll ask Dr. Thacker to go next on the same, from the lens that you sit in as a provider and just as a health expert as well.
Yeah, can you hear me? So, look, I agree with Stephen that NHIF had reached a stage where it was no longer fit for purpose for the number of population that we have in Kenya, the demands, and the health needs. From the time we started during independence, which was set up for the civil servants, like Stephen says, it was a hospital fund. In fact, the name was National Hospital Insurance Fund. In order to expand its mandate and to enable Kenyans get the services that they need, it needed a structural change. I think Kenyans were seeking out for a change. That was one. The second was, it was too complicated, NHIF, because it started collecting, it started accrediting, it started paying claims. It was the only organization that did everything. You mentioned Ghana, you mentioned Rwanda, you mentioned UK and Germany and other places. Functions are segregated. Lack of segregation caused a heavy load of complication for NHIF, and it then led to leakages of a very high level. In fact, the trust for Kenyans eroded rapidly. If we had a trust barometer for NHIF, it will show you how rapidly it declined. The viewers and the listeners will tell you it's a great example of a non-trusted public entity. And asking an entity to collect more funds when you know that the funds are not being used well was a fantastic mistake. So we can talk about benefits, we can talk about designs and everything. Fundamental issue about NHIF was trust. All-time low. Leadership changes didn't work. Board changes didn't work. In fact, there was a huge discussion whether it should be parked at the Ministry of Health or it should be a Ministry of Finance. Worldwide, insurance is a function of finance, not a function of health. And if we get that right, we might see happier Kenyans, happier health, longer life, because the last thing we want to do is to have any gaps that will create leakage of funds. So the change by the administration is great. And I think that's why I think the move to SHIF is a good start. Will it work? We need to work together. But it was a highly needed change that this government has put in place. And let's see how it goes through.
All right. Before we go back, I guess, to some of the, maybe more contribution-based questions, you've mentioned trust, right? How would Kenyans know that a change of organization will improve the trust, right? If the people are the people, what is the evidence that trust will improve, right? If you just change the institution, but the operations and things have historically been the same, what's the evidence?
Yeah, so changing a name is not going to change trust. We all know that. and Kenyans are very smart about this. I think the way I'm seeing the reforms is they're segregating functions. Who's going to do the facility financing, the primary healthcare fund from 1 to 3, social for inpatient. It's fantastic. That's the way it should be. Funds should be monitored and we should audit them. Let's have audited accounts. We should know how much came in and how much went out. There have been questions on the chat that how come I pay 10,000 and someone pays 500 shillings and we get the same benefit? And I don't think anybody minds as long as the money is used to look after populations who may not have that much of an income. But everybody minds if half of the money is disappearing and not accounted for. Nobody wants to pay. So trust is not earned by changing a structure or a name. Trust is earned, and this should be done over time. And hopefully, all of us should walk the journey and point out the gaps. Audited accounts is one thing, benefits is one other thing, motivation of healthcare workers, paying claims on time to providers. There's so many other things that you mentioned, Samantha.
All right. And, going from that, I think let's get, Stephen back on the mic with regards to the contributions, right? So number one, I think a highly anticipated thing is when will contributions begin? Is there clarity? We've had things around March, is that set in stone? But more importantly, what is the basis for the 2.75%? We had it as an NHIF number, as you're talking about changing names. We had it as an NHIF number. It has now become a shift number. Those talks under the reforms of NHIF about doing 2.75% there. So how has it then moved to shift if it's a different framework? And what was the basis? So Stephen, maybe we can get your response on
that. Thank you, Samantha. So number one, on March 2024 has been mentioned a lot from the political class that by then we should have all systems in place so that we start collection. However, it is good to clarify that we are not doing the collections using the old systems, especially the digital system of the NHIF. So we have to put in place and test a system that is able to do the collection well and is able to map the collections with the benefits that Kenyans are going to get. So there's a whole lot of process that needs to go in place before collections start, and we cannot start the collections before that process is finalized. So I would say that the target is March 2024. However, this will only be based on the systems, and until all the systems have been put in place, they have been tested and they have been put under stress tests. That's the time when we will start the collections. However, we have been given a deadline of March 2024. We hope we will get into that. The second issue about the 2.75%, yes, that figure was actually brought about when we were doing the NHIF regulations, and it was taken as the average that if everyone was to pay equitably without trying to increase the fund amount, the amount of funds collected. We didn't, the 2.75 was not supposed to increase the actual amount collected, but however to harmonize so that those who are poor pay less and those who are able, they pay more. Previously it was the other way around. The poor were paying a higher percentage than the rich. So that was adapted from that background. And when we started the social health insurance discussions, we had to do a costing. So the first thing we had to know was 2.75% enough for good benefit package. Of course, if you want a good benefit package, it's still not enough. You find that in most countries for good package, they deduct between 6%, 6 to 8% paid by both employer and employees. In Kenya, initially the ministry was pushing for 6% deduction, 3% from employer, 3% from the employee. However, after much discussions between the executive and the labor unions and also with the employers, it was agreed that Kenya, we are not yet at the time where employers need to match the employees. And then number two, we needed to also have a figure that is understandable. So the conversation around 2.75 was already ongoing. So the discussion was that instead of 3%, let's stick to the discussion that's already ongoing. Then we fit our benefit package to that. So that's how 2.75 continued. However, to note is that the original request was to have 3% contribution from employee, 3% from employers, to offer a very comprehensive benefit package. That was the original discussion. However, at long last, it was settled on 2.75% one-off.
Yeah, just from the employee, just to clarify, yeah? So now it's 2.75%. Just to give context as well, in a country like Rwanda, for their healthcare, they contribute 15% of their gross basic salary, 7.5% from the employer, 7.5% from the employee. They then contribute another 12% for their pension, 6% from employer and 6% from employee, right? And so there's different models that have been adopted across the world in terms of this thing. But even in Rwanda, so we worked closely with the Rwanda Social Security Board, and we were also then discussing about the value of a cap, right? And a cap being because, you know, some people will end up paying, even if they end up paying, say, 100,000 towards from their salaries, but, you know, they can get a much better cover from private insurance. So going back to you, Stephen, on this conversation around the cap, you know, is there still scope for a cap? You know, or, you know, why don't we have a definitive thing around a cap? Is that something that's still in discussion?
Yes, so you realize that in Kenya, the model that we have adopted is where we have cross subsidization, so that those who, you know, there will be people paying 300 shillings, others paying, even not able to afford that 300 shillings. But we do well know that 300 shillings cannot offer you any meaningful benefit package. Even if you increase to 1,000, it will still not offer you any meaningful package. So the idea is that everybody contributes according to how their ability to pay. So in that model, it means that those who are well off will have to cross-subsidize those who are not well off, or those who are not able to contribute the full premium amount. So the idea is that everyone should contribute the 2.75, so that the person who, as you rightly say, there's somebody who will contribute 100,000 shillings a year, they will cross-subsidize somebody who has contributed 3,000 shillings in the same year, but they'll both enjoy the same package. Basically, that is the equality we were talking about, that we need people to be on the same level. However, the issue of capping has arose. What we have said as a ministry is that we will wait for public participation. We will let the public decide if they want capping or they do not, because we have noted that the people who are really affected by capping will be those who will be contributing above 1,700 shillings. So they will be most affected because that's already above what they were contributing before. However, from the data that we have, they contribute only 10% of the working class. So 10% are really pushing for capping that, the amount. But when we do public participation, you have seen we have been doing public participation around the country. The public is also saying if you deduct a border rider 2.75% of their income, who do you subsidize? Because if we cap, you're subsidizing somebody. So are we saying that we subsidize those who are earning, let's say, 500,000 shillings, they'll be subsidized, or they have, I mean, there's that discussion. How does that affect, and how does that affect equity? So we have let
Yeah.
that go out to the public, and the public will make the decision for us.
Yeah. Yeah, so you raise a good point around equity and the concept of solidarity, right? So when you look at, even when we say best in class was a country like Japan, even post-World War II, that's the approach that was decided, right? It was that camaraderie. And I think for them culturally, that's a big part of their culture in terms of how they behave, is that, you understand that the rich take care of the poor, the young take care of the old. And that's a big part of universal health coverage, is that element of solidarity. But, going back to why not choose the more administratively easy thing of doing a tax-based model, right? I think a big part of the feeling of doing a contribution off of your gross salary is that you feel it more, right? But arguably, if you did a tax-based model, when people buy bread, when people buy milk, when people buy the things they experience in their day-to-day, the similar impact happens because people with lower incomes tend to spend less than people with higher incomes, right? So why not use the tax-based model? Why use a contributory model in the context of Kenya? Why not take the Ghana approach and just say, load VAT by this % and use that for healthcare? Stephen.
All right, so we did explore. Actually, the tax-based model is very easy to implement, and it requires less mechanisms to be put in place. However, there are two things that we noted. We did those simulations. So we did note that the tax base in Kenya is quite, it's not yet very mature. So we will still end up with a very retrospective system. That is one, because the tax base is, and unless we use the VAT as the form of tax, like Ghana did, it will still be very retrospective. Number two, in case we did use VAT, which is more progressive taxation because it is based on consumption, the amount of funds we would get were very, very, very little. So we did note that it would not make any meaningful package. We would not give Kenyans a meaningful package. For Kenyans to receive a meaningful package, we would have to increase VAT from maybe 16%. I think the initial calculation was to increase 16 to 24% so that we get meaningful contribution. And you do know that that would have a big blowback. It would not be possible to implement. So that's when we say that it's better we go with contributory model. Number three, when we have contributory model, people tend to own the system. People tend to keep the managers accountable. They will know this is our money. It is not, most of the time when we use taxes, we say dio pesa ya serikali. So when we use contribution, everyone, including that person who is contributing 300 shillings, they will know that is my money. I need to make sure that it is accounted for. I'll need to follow up what is happening, who is managing it. So we need also that ownership from the population. Yeah, thank you.
All right, thank you. Just to give our audience some a small housekeeping, we'll spend the next 20 minutes still going through these questions with the panelists, and then we'll open for questions from the audience. So be typing your questions in the Q&A section. Our team are consolidating them so that we can ask the panelists the key ones. And if there are any questions which are asked that we're not able to answer in this time, we shall purpose to send an email with that. So you can see some people are raising their hands. Just type your questions in the Q&A, and our team will get us as the panelists those questions. All right. Thank you, Stephen, for those clarifications. And now let's go to one last item around contributions that is, historically been NHIF's main challenge has been about how they're collecting from the informal sector, right? In social health, collecting from informal sector tends to be very difficult, which means there's a big burden on cross-subsidization that ends up falling on the formal sector. So the question is, number one, how will things change for the informal sector from a practical point of view? Yes, we've heard there'll be means testing, but how will collection actually be effective? And how do you make sure we don't have the same issues we had before, where people will only come in when they need care, but they exit as soon as they put in the care they need? So that lapse in re-entry, how do we manage for that? And, you know, while we're there, like, how do you, there's talk of premium financing. Yes, we've heard they'll pay annual contributions, which will help reduce the lapse in re-entry per year because there are less frequent collections. So paying in 1 year is more effective than paying 12 contributions in a month. But for the premium financing, you know, what are the terms of the premium financing, and how do you make sure that people don't just use the money to, you know, buy food? The economic times are tough. Maybe they'll say, we'll just borrow the money that is meant to go towards premiums, and we'll just use it for something else that is required. And what will be the terms for those borrowing for the premium financing that is being said? So for just to add clarity, what the regulations say is that for those who are in the informal sector, you have to pay your premiums annually, not per month like the formal sector. So upfront in the beginning of the year, you pay for the full year. And they said for those who can't afford, there'll be an option to get access to premium financing, which means there'll be partnerships that the government and the SHIF will be doing with the SHA, the Social Health Insurance Authority, will be doing with different entities to get people access to the annual premium so they can pay upfront and then they pay back whoever they've borrowed the money from. Yeah. So Stephen, help us get some clarity on that. So for the informal sector, how do you make sure we don't have the same issues we've had historically? How do you practically collect given the structures? How do you manage against the people coming in and out as was happening before? And for premium financing, how will it actually work?
Okay, so in the first question, I think you allow me to expound also a bit on the proximity testing. So before the any person in the informal sector pays into the social health insurance, the first thing we have to ascertain is how much can they afford to pay. So that's the first point. So we know that in the informal sector, if you ask somebody for purposes of setting the premium, if you ask them how much they earn, or more often than not, especially in the Kenyan situation, they will tend to underestimate. So that's where the idea came that we need to do means testing. Means testing is basically assessing the socioeconomic conditions of a household, and using that socioeconomic condition to place them or to ascertain exactly how much they would contribute or how much income they would most likely be having. So we have had data, a lot of data connected by the Bureau of Statistics over a long period of time since 2003, comparing socioeconomic status and income of households. So we have a huge data set. And from that huge data set, we're able to train a model that will be able to give us, based on the socioeconomic status, how much would this household be able to afford. So that is one. So the second part comes into how do you pay? So once you know how much you can afford or you're supposed to pay, we need, first of all, to do what you're saying. We need to sell a product. So we need the people, first of all, to accept that this product is beneficial to them. And that comes to what benefit are we offering Kenyans? So that will be the second part. And after the regulations are in place, that's the leg that is the ministry is moving towards, or rather the authority, Social Health Insurance Authority. So they will be selling a product. Instead of trying to look at it from a compliance point of view, we will look at it. This is what, if you give us 300 shillings or 2,000 shillings, this is the product you're going to be entitled to. It will have these benefits and up to this range. And we see how people are going to buy into that. Now, we know going to work with individuals or each household is very difficult if you want to convince. So the entry point we're looking at is through cooperatives and basically social groupings that are there in the country. So we have, for example, if you go to the boda, each area will have an association. If you go to the tea pickers, we have KTDA as the entry point, and the other, the local tea point or tea organization, tea circles. We have milk circles, which we can use as the entry point. So for that, we foresee that we will be able to capture quite a huge number of the people. So in the initial period, we don't anticipate that there will be enforcement mechanisms, though it is mandatory for all Kenyans. So for the first phase, it will be selling a product and seeing how the people like the product. Are they going to buy into the product? And if they buy into the product, are we going to deliver the same product to the people? So there will be a lot of testing. Then later we will see if we have to have enforcement mechanisms, how they come in place. The third thing is to avoid the issue of people paying only when they are sick and then they disappear once they are treated. So we have brought in the issue of people in the informal sector will need to pay yearly. They will need to pay yearly upfront. But if they cannot afford upfront payment, the income in the informal sector is not evenly spread within the year. So there is the option of having premium financing offered by government. This is basically will be online financing, whereby you take the loan the same way the Hustler Fund has been working. You take the loan, but the loan is deducted directly into the Social Insurance Authority, and you'll be able to pay within the year based on how your income is spread. So you'll be able to discuss with the lender. The premium financing, we expect it to be very low interest rates, just administration, the same way we have the Hustler Fund, or even lower than the Hustler Fund. Basically, I think the idea was to have 3 to 5% interest rate per year because it is guaranteed by the state. So that we foresee that it will cure a lot about the issue of lack of remittance for the non-paid. So another way that if we go through the circles, we can have a contractual agreement with the circles. So for example, tea farmers, if we have an agreement with a specific factory where these people are delivering or the farmers are delivering their tea, we can have an idea that when the bonus comes, that's when deductions for SHI are done. And with that, we are able to guarantee the service so that we avoid a lot of adverse selection. Back to you.
All right. Okay. Thank you very much, Stephen. I'll give you a break in terms of dealing with the contribution elements as we go into the benefit side. And I'll ask Dr. Thacker to, get on the mic and help us address some key questions, right? So number one is, the benefits suggest that people need to go and seek primary care first. So people are being told you must go to a level, really 2 or 3 facility, which are your health centers and dispensaries, before you go to your secondary facilities, which are your hospitals and your specialists, right? So, do we have the relevant infrastructure to make this happen? And, how will the health-seeking habits adjust so that we don't come in 1-2 years and say, hey, the fund went bust because people were not going to primary facilities? How can health-seeking habits be adjusted so that people can do that? And what in the regulations or from where you sit is being done to facilitate that transition? Dr. Thacker.
So that's a good question. And we all know that prevention is better than cure and it's cheaper than cure. It works everywhere in all developed countries. And we need, as Kenya, to move in that direction. Something very different happened in the last 40 years. When the fund was set, do you remember it was only paying for inpatient care, as you mentioned? So most of the infrastructure and the programs in Kenya focused on building hospitals. There were very few who focused on building clinics. In fact, I remember we were the first few ones at Avenue to start making multiple clinics. and then many others followed suit. And the reason was there wasn't a funding mechanism. NHIF only paid you for inpatient, so everybody programmed to build inpatient facilities, making Kenyans seek, even for Homa, going to inpatient facilities. So the design in the last many years got shaped towards an inpatient care model for Kenya and became a very hospital-based health-seeking facility. Then also the low funding in primary healthcare by government made some of the level 1, 2, and 3 very weak because they were running out of medicines. They didn't have qualified personnel. So people thought it was quite a waste of time to go to any primary healthcare because they'll always refer you. So why don't you just save your trip from going to a primary facility and just go to secondary? The health-seeking behaviors will change when we have the health ecosystem and the health professionals working with the population on saying prevention is better than cure. Primary healthcare is cheaper. It's definitely 70% of the conditions can be dealt with primary healthcare situations. And by the way, healthcare starts at homestead and not at the hospital doorstep. When did we as Kenyans start thinking that healthcare is always at the hospital doorstep? This is the reason why we have a whole blot in the cost of healthcare. So I think the relevant infrastructure will come up. If you incentivize primary healthcare, you'll see many, many nice and good primary healthcare centers built up. GP cares will flare up. You will be finding it easy to access. You don't have to look for parking, go to big hospitals, wait in a queue for 2 hours to be given your medicines for flu and cold. That is costing us huge amount of money in Kenya. So I really like the primary healthcare idea, but we need to make it function. Over to you.
Okay, so in terms of going beyond that, right? What is now going into, a lot of our client base here is also the private insurers. That, it seems like the way things have been framed is to kill the private insurance sector. Yeah. And, like in terms of how the benefits are being structured, in terms of how contributions are being structured, it will kind of make disposable income lower for private, for people to be able to buy insurance beyond that, right? So from a structural point of view, how have benefits been designed or under shift to make sure that you're not killing the private insurance sector? Because there's a lot of jobs there. There's a lot of revenue generation that comes from that side of the economy. Yeah. And maybe even as you're answering this question, the question there is also around what's the economic impact of this shift? Yeah. What is the anticipated economic impact? How will it help or affect negatively the different stakeholders in the health ecosystem?
Yeah. So look, it's definite a resounding yes. It's going to destabilize the private market. Anything new and more funding, it's absolutely a yes. Now we need to find a coexisting strategy that will not, it was never designed to kill private medicine. It was not the intention. But, we also mentioned collateral damage. It's 100% collateral damage. And the private insurance must start pivoting. The entire insurance industry in the private market should model around the whole system of integrated approach. For a long time, the private medical insurance in our country has been very slow in innovation, absolutely slow. So we need innovation. We need models of integrated. We need microinsurance. And I think the most important point is employees are paid. So with the 750 million being captured, you probably find that employers are paying 80% of it. And here, I think the idea is if employees are paying, will the employer still carry on the benefit it's giving? There are two very different sources of income. I know it's interconnected. It could be because the cost of the employer is not changing by even 1 shilling. It is the employee's salary that is paid. So I need clarification from many people in private insurance or in the sector, corporate, talking about this 2.75. Are the private employers saying that they'll pay on behalf of their employees? That's not what the design is framed about. So we need to clear this air, Samantha.
Yeah. I think arguably, like, from that end, the argument is that, and this is, I think, the general criticism around social health insurance, even from whether that is better than a tax base, right? I think from a policy point of view, the challenge is usually contributory basis means, it discourages employment because people then demand higher salaries. They're like, my net income, people are like, my take home is being affected, right? For me to stay in this company, I need you to meet. So it ends up being pushed to the employer, right? And then the employer is then asking, do I then pay for both in that regard, right? So even if that's not the design, I guess that's the challenge and the sentiment on that basis, right?
Right.
So yeah, I think that's the question.
Like you said, Rwanda, look at Rwanda, 27% of the salaries is going to health and pension. You look at Tanzania. So, and you look at Kenya, it's such a small fraction that we are paying into pension and health. If you look at 1,700 and 250, we are paying probably the most minuscule amount. How it's used is a different thing. Even the small amount was not being used well. I think Kenyans need to frame the public participation around use my 100 shillings well. I think that's the issue. And if it comes out that way, from my 100, I can give you 200, I can give you 300. If you're going to enable us get services and not have somebody wrote this everlasting corruption riddling in and money disappearing, then Kenyans must rise up and say, no, nothing doing. So I think we need to be very clear about transparency. We need to be clear about every shilling in, every shilling out. We should take no nonsense about audited accounts of shift, because this is Kenyan hard-earned money. It doesn't belong to other people. Yeah. It's their own personal money. We are shareholders. So every shilling in and every shilling out is an audited account should be available. There should not be any excuse for that. Then the trust will build.
Yeah, so that's in terms of, looking at reporting and governance, and we are just us holding to a higher standard. I think we've also been challenged by the ministry to participate, public participation. So we'll call everyone. The more voices that we are, I think the more power there is to move. So even when we're talking about challenges of capping and things like that, it's important to raise that. And hopefully with the information that you're collecting today, it helps you frame questions in a way that is also more informed. Now over to William. Just even wearing your private insurance hat, so when you look at, based on your understanding, you've worked a lot with medical providers, is it feasible for, historical managed schemes and for employers to be able to pay for both public and private solutions? And, even if it's not, what shifts will be required to be able to make sure that, on a macro scale, everyone is getting access to the best benefits they can. We're looking at wider economic growth and overall just improvement of the health of Kenyans, institutions, and the economy. So, William, over to you.
Yeah, thank you for that question. The way I would look at it, number one, just we should join down what Dr. Meet was trying to talk about. Employee morale is very, very important. It's something that we need to consider, even when we are coming up with the levels of taxation. Because, for example, when we come to the level of the contribution of the 2.75, yes, we know the 2.75 is now a taxation, and we need to put it in the basket. But what we are saying is, we know the contribution, but we do not know the benefits. Do we have that level of trust that you will give somebody the money that they're asking for without knowing what you'll be getting back? The answer lies in the trust that Dr. Meet has been talking about, because we need to build that trust. Now, we have, for example, the employees who have committed their payslips in one way or the other, and then you now come and strain them. Indeed, you are actually straining the employer, you are straining both the employee and the employer, and therefore the job of the employer may not be able to move in the right direction. If, for example, you look like a person earning like 300,000, their contribution to the kitty will be like 99,000 per annum. When you look at the private schemes that we have, the average contribution per family is 100,000. To get it's 100,000, and they are getting the kind of benefits, the kind of superior benefits that they are looking for. Now, you contribute the 99,000 for benefits that you are not very clear of or you don't know. And here again, you may need to pay for some private insurance because you don't need, you feel like you are not likely to get the benefits that you would be looking for. So indeed, you'll be paying 2 times. The 99,000 is almost the 100,000 that we are talking about, which is the average per family. So,
Yes.
So looking at the contributions now in terms of whether they should pay for the private and the public, yes, they should, because we are all contributors to the scheme. The effect that has is that those who are taking private insurance will get that factored into their premiums, so that they don't pay those high premiums, because the SHIV is also coming in to pay for the basic services that will not be paid by private insurer. Otherwise, if the private insurer was to come and pay for all the benefits, then you would expect the premiums to be higher than members of the public could afford. To the holders of private insurers who are not in schemes or in corporate schemes, if, for example, my disposable income was 50,000 shillings, and then you ask me to contribute another 10,000, that reduces my disposable income, and therefore I will not even go for that private insurance, because now this 10,000 is the money that I should have used to go for this private insurance.
Yes. Yeah. I think that's, and you raised a good point in terms of just giving clarity on benefits. So I'll call Stephen back to the mic in terms of, giving some clarity around benefits. So when it comes to benefits, so we've heard that there's the 3 funds, right? So we know there's the primary healthcare fund, the social health insurance fund, and the essential and the chronic illness and emergency fund, right? And what has been said in the regulation is, first, people will access from the private healthcare fund, which will pay level 1, 2, and 3 facilities. Then the social health insurance fund will pay level 4 to 6. And only when you've exhausted your social health insurance fund benefits, you'll access the funds for the emergency and chronic illnesses. But what are the practicalities and how these things will interact? How will the fund be able to keep track of where people are accessing and how money is flowing between the 3 funds? And then second to that, the regulations came out, mentioning the benefits, that this is what will be paid at the different levels. But what are the specifics of the treatments and the tests and the medications that will be made available? Is there any burden of cost for hospital bills that will fall on insured members, right? Because if people are paying, say, 100,000, are they still going to go to hospital and have to pay extra because of the caps? Are there any caps in terms of the limits for how much you can access? Even when it comes to the social health insurance fund, when you've exhausted your fund, what does that mean? So we just want some clarity around the benefits. So how do the benefits interact is one question. Number 2, where are the specifics around the benefits? Are those things that are going to be published in terms of, test, treatment, and, burden on the insured members? For context, there are a lot of countries that have social health insurance funds that have copay. In Rwanda, yes, you pay 15% of your salary to the fund, but you also pay 15% of the bill when you walk into hospital. in South Korea, in Japan, their co-payment, what they pay as a proportion of their bill is anywhere between 40 and 60%. Will there be an extra burden of cost on members as they seek care? And what are the limits that are defined within the benefits? Stephen?
Thank you very much. I think for clarity in terms of the three funds, so it has been said, it has been indicated in the regulations that the three funds will be catering for different levels of care. So if you have primary health fund, it will be the first contact point for the medical system. So once you are referred from the primary healthcare fund, that's when you move into the accessing the SHIF funds. So this is mainly for curative facility or high level of care, which is curative by nature. And until you exhaust all that, that's when you move to the chronic care fund. But one thing to note is that that movement from the primary all the way to chronic, when you look at it from the citizen's point of view, it will not be visible. And that's why we have one authority taking care of the three funds. So what the population needs to know is that this is your package from the lowest level to the highest level. You will not be able to move to the highest level of care before you are referred from the lowest level of care. So that will be the first point to come in. You need a referral to move from one care to the next. In terms of which fund you are utilizing, that will be masked from the ordinary user or the ordinary client. They will not know whether they're using SHIF or they're using PHC or chronic. They will just know they're accessing the benefits as promised. The main reason why we separated the three funds was that we noted every time we open up or we have one basket, primary health care tends to be ignored or to be forgotten. And number two, the curative part tends to eat a lot into what is allocated to health. So you find it is very easy to claim or to set up regulations and claim systems for the curative aspect. So we tend to forget the primary care. So that was the need to separate the primary care and the social. Number two, it was also noted that for chronic care patients, they will almost always need to, it's actually not an insurance model. That's why in the private sector, it's very difficult to insure chronic care because they have predetermined times that they need medication, they need care, and they have to use it. So it moves away from an insurance model to more of a managed scheme. So that was also the need to actually insulate the SHIF or the social health path or the social health scheme from chronic care, and so that also government can prioritize paying for primary care. The second thing is to note that the primary care and the chronic care is fully funded by government. So everyone who pays to the social health insurer, their package for chronic care and primary care will be taken over by government and the government will pay for them. I think that was the main question. I lost the last question. Samantha?
So I think just building up from what you're saying, right, is, you're saying you have to go to primary care, but how will it be effective? The details of the benefits was one, that was the last question. Why don't we know, what is specifically being paid for, right, in terms of procedures, in terms of medication, in terms of testing. But I think just as you're answering that as well, maybe you can help us address the issue of ability to deliver on service, because you've talked of the primary healthcare being the first point of call. And Amit, maybe you can add to this question as well. Are we ready? Like you were saying, this is happening from March. Are we ready for primary facilities to be able to take the influx? If you say the scheme is mandatory for all Kenyans, based on even what Dr. Thakur said about the historical framework and, the fact that as of today, there's low levels of primary facilities available. How does that look practically in terms of transition? given the current situation. So Stephen, you can start. Maybe Dr. Thacker, you can add.
Yeah, okay. So in terms of exactly what to be provided at each level, we have done a whole list of conditions and the treatment paths for each of those conditions. So that's what we are using in costing. So this will be shared with healthcare providers. There will be discussions on that. A discussion actually already ongoing even as we talk with the provider to see that the treatment regimes that are provided or that have been proposed are the right procedures, including which tests are required, what procedures are required, and what medication is required to for each condition. So that is, there is a huge list of all these conditions and the treatment paths. So that is what will be agreed on with the facilities. The second point is that once a person goes into a facility, in case they do not get all the procedures in that facility, when they move to the next facility, they should be able, the facility that they see first should be able to charge only up to what they have provided, so that when the person goes to the next facility, they're able to proceed with the care. Another thing is there will be quite a lot of digitization. So a lot of this movement and monitoring will be done through a digital system, digital ecosystem. So that will take care of eventualities of double treatment, etc. Now, the second point on capacity of primary care facilities. At the moment, we felt that, and maybe Dr. Laka will address that, the main issue that affects the supply of the healthcare system in Kenya is the demand and the ability to pay. So you find there are some regions whereby the private sector will shy off from setting facilities in case they know that it is very difficult for people to pay for, especially primary services, which is not very critical to the patient. So in this new model, what we are leveraging on is ensuring that people have ability to pay through insurance. And from that, we leverage on the quick turnaround of the private sector healthcare providers. We know, if we know everyone in Turukana, Lodwar town have the ability to pay, it is very easy to mobilize the private sector to set up facilities in that place. So we are really leveraging on the demand supply curve being addressed by the private sector providers moving forward. We know even as we are talking, the private sector provides almost half the healthcare supply in Kenya in terms of bed capacity, facilities, and health workforce. So we need to ensure that if they're incentivized, they're able to move in. Number two, we usually experience the high influx of healthcare in the healthcare facilities, mostly at public facilities. So we foresee that with these shifts, and with the people being able to pay, you know, the premium, the tariff is the same for both private and public facilities. So if people have are insured and are able to pay in the private sector, we will see some shift, decongesting the public care system, and people are moving to the private care system to ensure that they're operating within capacity. That is one. Number two, in case the capacity is exceeded in the private care system, the private care is able to really turn around very quickly and invest and provide investment, as long as they are sure that the business is there or that people have the ability to pay. I hope that answers your question.
Yeah, so we, conscious of time, we'll take 10 minutes to just close out the session, and then release people. And any other questions that are not answered in the last 10 minutes, we shall look to respond with the panelists thereafter and send everyone out an email, because we have emails from your registration. But there are a couple more critical questions that have come through. We have been collecting the questions from the audience and adding them to the questions as we engage the panelists. So the next question, so just adding to that, Dr. Thacker, but as you're answering, you know, what will be different? You know, we've had a big fraud issue. You talked about, you know, with NHIF, the challenges there have been. with wastage and money slipping through the cracks, what will change? How will it practically change to be able to stop this? How will we know that, hospitals will be paid for these specific benefits? Just you can build on that as you address the question about, are we ready, right? Do we have the framework? And what's the rush? Why March? Why not say if we strengthen the primary care network and then make the transition? Dr. Thacker.
Look, when we when we brought in Kenya Kwanza and the election was there, the manifesto was very clear. A government has been voted in. It has a plan, like a strategy plan for any company. So that was a plan on which they came into power, and the healthcare agenda was clear. Why March? Why April? Why this? Look, you have to start somewhere. Do we need to reform NHIF? Absolutely, yes, no doubt. We would have gone even further down. Is this a good try? There is an attempt. How do we manage it? I think the head of state, the CS, all the officials are committed. Now we hold them to account. Every shilling in, every shilling out. That's all I'm saying. Now, history is a good lesson, but a bad home. Are we going to get stuck as Kenyans just because in the past there have been these things? Fine. If we want to get stuck, we never move. Are we willing to give it a chance? I think we should give a chance, but we should be very vigilant and say, as we track it, enough is enough. And if there is slipping going on, we can even stop. It doesn't mean if it starts and it drains Kenyans' money, we don't stop it. So I think there is commitment. Everybody from the top is involved, getting the right people on the board, getting the best of class. Kenyans has fantastic team members. Get the best people in management. Get the best people on the board. Get the sharpest minds to manage the one thing that matters most to Kenyans' health, so that we can live longer. In primary healthcare, like Stephen says, half the players are private sector, and private sector will open all these clinics, whether it's clinical officer, nurse-led, doctor-led, will open this, many of them, but the reimbursement model must be clear. We may need to make sure that the capitation is correct. If you underfund a private sector, then you promote bankruptcy. Then SHIF becomes the best model to bankrupt Kenyan businesses and Kenyan clinics. That's not what we want. So the numbers must add up. The reimbursement model must be clear. We must use digital. We must use telemedicine. The younger generation of Kenyans are going to find telemedicine as an underlying paid service by this to reduce cost almost by 30 to 40%. Many of us have tried it. We're doing tele-webinar. This is a tele-meeting. We are all here, and we still are getting the maximum. We could be in a hotel spending millions, and yet we're able to get the content. So my view is primary healthcare is a great way to put emphasis on the new type of care that we as Kenyans and providers should be rolling out. And it should be paid fairly and appropriately in the capitation model. Thanks.
Yeah. Okay. So you mentioned, we're getting older. So I think this will be like one of the last questions, and the rest we will again address separately, because I think a big part of our audience are, people who manage schemes for senior citizens. So Stephen, the question is around the treatment of retirees. The retirees in some ways are usually viewed as, vulnerable groups, but some of them have access to pension income. So will that income be considered as part of the income that will, be a base for contributions, or will they contribute the minimum, or will they be fully subsidized as vulnerable groups? If you can help us get clarity on that issue, Stephen, as we start closing out the session.
Thank you, Samantha. Now, for pension, we are already considering it as income, so it will be subject to the deductions. Yes, so pension income, rental income, those will also be part of the deductions that will be done for shift.
Okay, so rental income, pensions income. I think, maybe even just as as the audience, I think these are some of the questions now that we have more information. These are some of the things that allow us to more effectively participate in public participation, which is going on this month. The email address, if someone can draw it up, ask one of my team members to share us the email address in the chat that is being used for public participation. So if everyone can just also, with the information that we have, knowing the clarity, what are some of the key concerns would be a good thing to say. I think, we've had many challenges and there's a lot of changes that are happening at the same time. Hopefully we've been able to get more information through this session and some clarity. I think there's, we've definitely said there's some gaps in terms of information. And Stephen, I think even just as we talk about benefits, as much as the providers have access to the specifics around benefits, there's value in the public understanding, because they're the ones who are ultimately the patient at the end of the coin, who need to understand the specifics around what benefits are being paid for, right? So that people know this is what I can expect from this money that I'm contributing, and the alternatives. We mentioned some case studies. I think there's resources which we shall also share to help empower people in terms of understanding different frameworks. We'll share the slides that were shared today. There's a communication that was done. Conscious of time, we said we'll respond to the other questions. As we're sending responses for the other questions, we'll share the other resources for those who might have an interest. So I'll give each of the panelists a minute and a half each to just give their closing remarks, and then we'll close out the session. So William, you can maybe start us off.
Yeah, thank you very much. Mine is to say that the change from NHIF to SHIF, I think that was an important move. But at the same time, we need to look at the private sector scheme so that we make sure that we do not completely kill the private sector schemes, because this would lead to loss of jobs to those of us who are working for that private sector. And we're also saying that loss of jobs would also lead into loss of taxes to the government. It's a vicious circle. And we just need to make sure that even as we do this taxation, then we make sure that we coexist and not push some of the people that we have out of business. Because if we push them out of business, then it means also the government taxes will also be lower. The level of trust, I think we need to develop that level of trust so that we trust the government with the money that we are giving by seeing the correct results. Let's not put some cards behind like as in we will come up with the packages once we receive the money. Let's have the packages after. This is what I'm giving for this money, so that then we are all in the same boat. Thank you very much.
Thank you, William. Stephen? Your closing remarks. You're on mute in case you're talking.
Yes. I think the most important thing also we need to note is that the private sector needs to come in, because complementary insurance will also still be needed. Do we foresee that? I know we are saying that it might kill the private business, but we're also saying that it might open other business opportunities. We have had a lot of enhanced schemes. This will no longer be held out by government. So that is one opportunity for the private sector. Number two, if we have the social insurance authority being the base payer, so that means that the issue of who pays first now is solved once and for all. SHIF becomes the base payer. Then any other complementary insurance will come from the private sector. So I also see a business opportunity in terms of the market for the private sector players. And the more the base insurer pays for, I think the more the more the private sector will have a wiggle ground, the more they will not be exposed, for example, in terms of critical care, etc. So we see that being one of the good things we have to note. However, I think it's very important that the people own the entire system. They know that this is funds for the people, and we have to protect these funds. It is very important, as Amit said. Thank you. Back to you.
Okay, thank you, Stephen and Dr. Thacker.
Yeah, I think Stephen and William have said very great things. My suggestion, Samantha, is let's have a separate session with Stephen and other key champions, health economists, on integrating the private sector under SHIFT. That's all. We should have one session on providers and one session on financiers. Those are very two separate things. If half the team of Kenya is not happy, how will we score a goal? If 50% are going to feel a little bit disturbed. So I think with the Ministry of Health, Stephen and the team, let's have a great discussion of how to manage the possibilities of challenges with the private sector in provider style and in financier style. And in my closing remarks, I would like to suggest that public participation is great. It should go on, whether it's late or not, we should all give in our comments. In the end, we should come out with transparency and accountability of the authority. We should put a tracking measure in place every 6 months or every year, and we should talk about performance scores. And if it's not going the way Kenyans want it to go with their money, there should be an opt-out. And there should be clarity, because every comment on the box and every comment in the 47 counties is what is going to change. They are very tired. So let's say this government is ready for change, and they are showing. So the proof of the pudding is in the eating. So let's track it. And if along the way tracking milestones don't work, let's put consequences. Let's have KPIs. Make it simple. Let's not make it complicated. We do it all the time. You're told, okay, give half, give quarter. Don't contribute for another 6 months till we fix the problem. So there are many ways we can deal with this model. We cannot throw a baby out with the bathwater. So Samantha, collaboration is the new innovation, is my closing remark. Thank you.
Yeah. There's a saying that we go further together. You can go fast alone, but you'll go further together. Yeah. So yeah, there's a challenge, and there are some key things around, things that we can challenge the authorities around the regulations and giving us more clarity, right? Clarity on benefits will help insurers know where they can innovate, where they can play, and understand, how restructuring will look for them. It will also, give more clarity to the insured members in terms of what is their value for their money. You've talked about KPIs, which is an important thing, and accountability. How do we hold the new social health authority and the government to account? Yeah. So, and that should be in the law. Yeah. Keep it in the law so that we can hold them to account. So there's more transparency, and that we have an opt-out option, right? Even as we mentioned, for Rwanda, as much as it's mandatory, as much as the contribution level is high, there's an option to just have private alone and not, public, so maybe there needs to be that opt-out option that we can challenge for in public participation. And even for the caps, we've heard from, the representative from the Ministry of Health that, they're waiting to hear from the public around capping the level of contributions. So, let's do that. Let's inform ourselves, keep ourselves informed. People perish for the lack of knowledge. When you keep yourself informed, you're able to speak with more authority and, hold the government more accountable. So as we share resources, engage, we will be, taking you up on that, Dr. Thacker, and organizing a separate forum for those who are providers, separately from those who are insurers, to even just see how we can collaborate more together, and make sure that there's, more unified voices, and that we're focusing on the how, not just the what, but we're focusing on how we can practically make this transition in a way that's efficient and sustainable. you know, for us at Zamara, we really care about practical solutions. We've been hosting a social security conference. We did one last year, and there are a lot of key how outputs, right? We like to think of things in theory, you know, and a lot of regulations and things are theory. So how do we make sure that you come down to the practical of the how, so that everyone is clear on the process for transition? You know, we will be hosting another social health insurance conference in July. So for those who have interest in this space and how we can make our social security environments more sustainable, you know, those are things to look out for. But thank you for your time. We know that we've gone over time, but we know the conversation was heated. We have collected all your questions and we'll look to respond to those as soon as possible in the course of the week. Thank you for your time. Thank you for the time of the panelists. Go and empower those around you with more information, you know, with whatever is clarity, and challenge the government to give more clarity in areas where there is lack of clarity. So let's all participate in the public participation and, you know, work towards building a better nation for ourselves and future generations. So thank you all for your time. Have a good rest of your day and looking forward to the future conversations.